Good day, everyone. It's Dr. K and Gil Morales coming at you. And we have here a market that doesn't seem to want to give it up despite the gridlock between the Senate and the House over the standing issues. And essentially, in past government shutdowns have resulted in markets that have actually moved higher in many cases, as if the markets pretty much shrug off the idea that the government has been shut down on a temporary basis. That said, there is going to be posturing and maneuvering. Today, the Treasury Department came out saying that if Congress does not raise the debt limit and the U.S. were forced to default on its obligations, this could lead to a catastrophic event. Not just on financial markets, but on the economy, that they're saying could echo the events of 2008 or worse. And so one of the officials in the Treasury was saying that the only way out of this crisis is for Congress to act. Now, that sort of thing can rattle markets. We have market weakness today, and maybe this is a sort of posturing that's needed to get a resolution between the House and the Senate that comes sooner than later. We have a number of leading stocks that have continued to do well up through yesterday. Some of them are giving back some gains today. Of course, Tesla is the big talked about stock because some recent news events. Yesterday's sell-off was partly probably due to just the fact that it's come so far so fast. You all might remember it had a huge sell-off on July 16th. And that was on no real particular news. It's just that the company had doubled in a matter of weeks. And then it was off to the races again after that big pullback. Yesterday's pullback was due to the analyst downgrade. And again, there was no real substantial negative news out of that analyst, really out of, for primarily valuation reasons on Tesla, that they're downgrading this. We've seen this sort of analyst behavior. When a stock gets too expensive in their eyes, they downgrade it. The stock stumbles around for a little while, and then if it's legitimate, it'll just move to new highs in the coming days. But today we had a news announcement on Tesla. There's a car, one of its test cars had been running for about 86,000 miles. It hit debris, got into an accident, and caught on fire. That's the sort of thing that make people nervous, but again, I don't think it's real cause for concern on a fundamental basis for the company. I think more telling, though, is that the company has come up so far so fast, so it might need to rest here, it might need to base out for a number of weeks before it can break out and go higher. So we were saying in our market report this morning that you might want to keep your stops real tight, and you would have sold as it broke yesterday's low if you're using tight stops, using the 10-day violation. The other way to trade it, of course, is some of you have traded around a core position, and you might want to just hang on to that core position, but sell out any additional that you may have added on the way up. Gil?
Yeah, I would toss in, I had Tesla, and I sold it yesterday at about 189, 188, and my reasoning there was you had this nice breakout from this little flag formation, but as I saw it, you should have had some momentum going up towards the 200 level. And yesterday you had the downgrade, it gapped down at the opening, and then you had the rally. My feeling was that if it tried to turn green and couldn't hold the rally, I would just unload it. And the idea being that I would buy it back if it came back up to my my sell price rather, and just come right back in. That's one technique I use a lot when I'm dealing with stocks that are getting into trouble, and I will keep the stops very tight, because I think Tesla is, being a high flyer, it is subject to rapid downward price movements, and I prefer to be in a position to be buying into a drop like this and seeing how it bottoms out rather than having to sit through it. But that's just me, and most of you guys who have been on the chat room know that is the way that I like to operate, because I run heavy positions anyways. And I think my position in Tesla yesterday was about, it was about 110%, so it was pretty heavy. So the way I look at the market right now is that you've got all this news. I would only caution against one thing, and that is getting complacent and thinking that it's all due to the current government shutdown. I mean, personally, I think the government shutdown is a great thing. I think it should be shut down forever, but that's just my view. And regardless of whether you have Democrats or Republicans in office, since I think they're all just a bunch of screw-ups anyways, but, you know, that's just me. And I think, yeah, there's a lot of political maneuvering. I would expect, though, that will see a reaction rally from the market, wherever it is, once you see some sort of resolution come through. But then, you know, you're going to have the budget, the deficit or debt ceiling coming into play later in the month. You've got the Fed coming into play later in the month. So, you know, the market could just run sideways, choppy here. You can see the NASDAQ, yeah, we had a breakout on Tuesday after the shakeout on Monday. So you get a shakeout and a breakout. And volume was a little bit lighter. Yesterday we held up. It's color-coded blue because you opened down here, you gapped down and closed near the peak, which I think is constructive. Volume was a little bit lighter yesterday, and then today we're running. What are we running at right now, Dr. K? We're running down. Well,
probably
up
a little bit higher. Let me see here.
Yeah, up 4% on the NASDAQ and down 17.5% on the NYSE. So NASDAQ's running into some distribution finally. But, you know, we've had this situation, Dr. K, where you basically have had a divergence, and you've seen the Russell 2000 and the NASDAQ rocking to the upside, but the S&P 500 has diverged by going down to test its 50-day where the NASDAQ holds well above it. The Dow, I believe, is below, let's take a look at this, is below its 50-day moving average. So you have, you know, but those are 30 big, ugly stocks for the most part, and they've got like tech dogs in there like Intel and Cisco. So it's a weaker index, you know, just in and of itself. But looking at the divergence here, I have to ask myself, are the NYSE-based indexes, which really aren't as NYSE-based as they used to be, given that you have stocks like Intel and Cisco in the Dow, for example, and a lot of other stocks in the S&P 500 like Apple and so on. But do you think the Dow, or rather the NASDAQ, drags the S&P up, or vice versa?
Well, yeah, of course, that's always the question.
Pull out your crystal ball, or your crustal ball, as we like to refer to it. But
I mean, the Russell 2000's been, I think, the strongest index, and that is the most risk-prone index. So that is moving. That index has moved ahead. Shows that people are more willing to take risk in this kind of environment. And meanwhile, the S&P is lagging because, well, it's also, you know, it's got commodities related and bank stocks and things like that that can weigh it down compared to tech stocks, which tend to be more of the leaders in markets that are trending higher, as this one has all year.
So would you though perhaps look at the movement into, you know, everybody talks about, okay, if the Russell's acting well, then the risk-on trade is still working and still alive, but is that also indicative of a sort of a speculative froth, given the fact that we have been in an uptrend for the entire year, pretty much, not much of a correction. We've had a couple of corrections on the way up, but, you know, people getting frothy, looking for some year-end juice, looking for QE to really cause an upside move because the Fed isn't ever going to take their foot off the gas pedal. Could you view it that way as well? I mean, is it always a sign that... Pardon me?
Complacency. There could be complacency because we've been in this, it's really a stealth uptrend because it's been a very tough year for most people who are, you know, just trying to stay above water. I mean, let alone, you know, keep up with the indexes. Just to stay in the black for the year has been very tough for many, and including, you know, you just look at the ones that have been doing this for ages, and they're all seemingly having a tough time of things. So I would say that you know, that you have more and more people perhaps that represent typical you know, retail investors that are starting to get more and more complacent when they keep hearing, well, QE's on, QE's on. Therefore, the market doesn't tend to have more than a 5% correction all year, at least on the NASDAQ. And yeah, the S&P pretty much the same. Both these major indices just don't want to correct with QE at the helm. So of course, you know, that's always an issue that what is it? The number of bears becomes lower and lower. which is what's going on right now. The percentage of bears is very low. That does not make a market top, though. A percentage of bears can go from low to lower, and the market continue to go higher. So you can't really use that indication as any kind of clue, unfortunately. And really, the best thing to do is just to keep watching the action of the leading stocks, which right now so far have been overall fairly good.
Yeah, I think outside of Tesla, but I think when things start to get like this, I think you got to at least be on your guard and be watching your trailing stops or whatever it is you're using to blow you out of your positions and at least back off into some cash if things get worse. So
yeah, let your stocks tell you what to do, basically, is always the rule.
Yeah, and we can look at a few of those. Let's see, one that's been acting pretty well is Yelp. I mean, this was, you see it come down towards the 20-day moving average here, and that's probably, I thought it was Bible, I bought it there, but you get the run up here, and I actually will sell into this move because I don't really trust the market right now. I do think the market could come down further. Wasn't there one pullback following a government shutdown that was nearly 5%, like 4.9 or something like that?
Yeah, there was some nervousness. I don't remember the exact percentage, but there was nervousness ahead of that deadline day.
Yeah.
And then, of course, it was resolved and the market went higher.
Right, and I think you want to be in a position, though. If you're, like I said, you look at Tesla. I don't want to be in a position where I'm holding that. If I came in and played this move here very nicely, I don't want to be sitting through this. I want to be looking at using my cash maybe to buy it in an opportunistic way rather than having to worry about whether I got to hold it or run for the hills. Market's getting worse here, as you can see. So I think that's my tact, and just keep your stops really tight. The other thing is to sell into strength. There's nothing wrong with that. I mean, look at some names like Trulia. Nice move yesterday. Oh, but it's all gone today. Oh, well. YY is holding up okay after a nice move. Notice again, you're finding the support off of the 20-day moving average, which seems to be a useful moving average. Here, you would have even said YY violated the 10-day, but I don't think you're using the 10-day, using the 50-day. It's a very volatile stock, too. So it doesn't necessarily hurt to play some of these moves in the short term if the indexes are acting a little bit funky. That's how I'll do it. So somebody says I sound like I'm in the distance. Maybe that's your internet. How do I sound now? What do most people think? How do I sound? Nobody wants to answer us.
Well, you sound fine to me.
Fine. Somebody says
fine.
Somebody says I sound sexy. That's great. Too bad you're not my wife. Most people say fine. So a lot of that's internet issues. Either your internet or something else. But unless it's all the way, everybody's got the same sound coming through. I don't think it's really us per se. But those are the vagaries of the internet. So we'll deal with it. Anyways, let's go back. Looking at some stocks. What else? Let's see. Splunk is acting okay. I like the way this is acting. Look at it on the weekly chart. You're pretty tight in here, so watch for some sort of 3 weeks tight. If the market comes out of this, the stocks that hold up real tight and are in setups are probably the ones you want to be looking at if the market gets its feet here. So still coming off. You can see up here on my Dow, S&P down 15. And a quarter, NASDAQ down 31.52, so not quite 1% yet. Trannies are down more, utilities down more. I don't have the Russell up there because eSignal only adds it as a delayed quote these days. I don't know. Does anybody get a real-time quote on Russell anymore? Let's see. What do you think? I'm going to answer some questions, and then we'll kind of rotate around here. TK, what do you think of TK with the turn higher in shipping rates in the last month? I don't know. I don't really pay attention to shipping rates. The company's earnings were negative 88% last quarter, so I'm not really that interested in it. So, I mean, I'm not really going to play the news on that. Let's go S-Fund. I like this move in S-Fund here. This is a little pocket pivot. Not a little one, actually, a pretty big one. But stock's backing down today, so it's trying to set up. But just keep an eye on this thing because it is acting well. I bought it in here. The only problem I had with it, and of course it was a quick trade, but the only problem I had with it was it's not marginable, so cheap little Chinese stock. Blocks, you had a pocket pivot. It's holding the 10-day. Notice how this morning it pulled back to the 20-day. So it's hanging in there. So tight stock, hanging in right now. Just see where it is once we get through all of this craziness. XON chart looks similar to SFM. Well, we pointed out the pocket pivot here. I'll tell you the story on this stock. You guys all know I had surgery back in April, and my urologist, my surgeon, it's like when I see a doctor, it's like 15 minutes of the appointment is talking about my health. The other 45 is talking about stocks once they find out what I do. And it turns out my urologist is aware of O'Neill, reads IBD, and he doesn't really go by the O'Neill methods himself, well, because he's a doctor, right? But he pointed this out to me when it was up in here, and it had done this V-shaped move. And basically, it's a IPO is 16 bucks, and you had a big, it's sort of a flag, a sloppy flag formation. So I told him, I think I'll buy it when it retests this low, and so it did. And so I bought some of it, and I've sold into this move myself. So, and I sold it out yesterday. Could have sold it this morning, but I think this thing's going to need some time. The other thing here is if it's a double bottom, you haven't undercut the first low. That isn't necessarily a problem, but if you look at the weekly chart, it's a little bit of a sloppy kind of double bottom. So my guess is you're going to need to see it tighten up in here, and I think it will. It's a very interesting story. You should look into it. You can find it and go to Seeking Alpha and look it up, or just go online and look at it. It's a very interesting story, right, Dr. K?
Yeah, I mean, it's definitely sounds like it's a cutting-edge technology, basically using DNA programs that control the way cells function, and so it can use its programs in various end markets like food, energy, environmental issues, and of course health.
Yeah, somebody was saying that XON and SFM looks similar. I don't know. I mean, other than the fact that they're flag formations that form after a big IPO move, and they undercut the lows. Notice though SFM was a little better because it undercut the lows. We were talking about this one in the chat room and undercut the lows. That's an unorthodox spot to be buying the stock, and it didn't have any kind of a move until you had this sort of pocket pivot breakout here, which becomes tough to buy because of the fact that it comes straight up off the bottom. But I mean, it's similar in the fact that it was a flag breakout where you retested the lows. In this case, you undercut, which I think is healthier, and then we're able to break out and move higher. It's still very thin, funky stock, and it's very volatile. So you definitely want to be apprised of that. I don't think it trades that much on average. There's no 50-day moving average of volume yet, but it can have some big days. Anyways. Compared to Helicopter Ben, isn't Janet Yellen more like Spaceship Janet? She's a little bit spacey, I think. She's got that sort of left-wing kind of Birkenstock thing going on a little bit. But I don't know. I don't know much about her myself. Do you know much about Janet Yellen, Dr. K?
No, it's just about not yet. No, it's just about how the market perceives her and how they've reacted.
Yeah, I guess the view is that she's a dove, a monetary policy dove, and that's pretty much the deal there. So let's see now. Some more questions here. Thoughts on how GLD will act if we can't resolve to raise a debt ceiling by the 17th? Well, I think if they don't raise a debt ceiling, it's probably going to react to the downside. But I still think the whole thing is kind of bizarre because you see these politicians. And I like to surf channel the news station, so I'll watch CNBC, or CNBC, Fox, CNN, MSNBC, which I think the MS stands for more socialist on MSNBC. But what I notice is that everybody, including even these commentators, particularly on stations like CNN and MSNBC and CBS, ABC, NBC, the main news stations, they seem to all fall in line with the idea that not spending more money is a bad thing and spending more money is a good thing. So, like you were saying, Dr. K, the budget, the debt limit issue that may come up, and it's basically the argument that we need to increase the debt ceiling is based on the idea that we need to dig ourselves deeper into a hole in order to avoid falling down into a hole. I like that. That's a great paradox, but it seems to be what they're talking about. Am I missing something there?
No, that's pretty much it.
So I guess if they raise the debt ceiling, that should be positive for gold. If they don't, that should be negative for gold. So you're basically betting on a binary outcome there if you want to buy gold, betting that they will raise the debt ceiling. What's your take? Do you think they're going to raise the debt ceiling, Dr. K?
They always do. I would imagine they would because there's too much political pressure to not do it. So I assume it'll happen again, raising it. The hole will get deeper and deeper. We'll just go dig ourselves deeper into this pre-existing hole that was created some years ago.
Yeah, so it's going to end up resolving itself. That's my take. Anyways, let's look at some more stocks. Biogen today had a pocket pivot here. It's breaking down like everything else in the market. It's trying to hold up. You might look for support at the 20-day moving average. OCN, same thing here. Here's your breakout to this little flag. Now you're pulling right back into it. So does this become a buy spot? You know, it should probably hold here and hold the 50-day moving average, which is right at 52.71, I would guess. But you know, if you're asking us about these stocks as if you know, should I hold them or sell them? I think that you're asking us to pull out a crystal ball, because if the market's going to get in trouble, then yes, stocks are going to pull back in general. And what's going to happen then is they'll come into areas of possible support where they might be viable. And that's one reason why I like to sell into strength and then be in cash on something like this. And I'm actually short today, I should point out, a couple stocks. And be in a position to be catching this pullback rather than wondering what I should do and sit through it. So, but that's just the way I operate. And stocks that act pretty tight along the 10-day, if they start to falter or can't hold the 20-day, then I'm just out and looking at where I want to buy them back. So NSM, I think, is in a similar situation, pulling back. Dr. K, to your knowledge, is the government shutdown a negative for any of these?
Well, stuff like NSM, you know, I really wouldn't. There's a lot of cross currents, so I wouldn't want to. I would rather just say, these stocks will tell us ahead of time.
Right.
If that's a real bad issue. I mean, so far this is not projecting any kind of issue with that, because it's still trading near its highs, and the whole industry group is ranked number 2. So my intuitive guess would be no. It doesn't really make a real big difference of these kinds of companies.
And if you own the stock right now, what would you be doing with it? Let's say you bought it. The last real buy point, I think, was just right along here, around the 50 area, a little above. So what would you be doing with the stock there today? Just sitting?
Yeah, I mean, it depends on my exposure. If I had a lot of stocks, I might have eased up on this one. If it was a bigger position, I might eased up, used 10-day violation as my sell point a couple days ago. On the other hand, if I have room in my portfolio and I'm comfortable with my position, I'd be just sitting on the stock and maybe trying to use the 7-week rule as my selling guide. But know that in the past, this stock sometimes is choppy, and this group can be choppy, and it tends to undercut the 50-day. And that's another reason why I like the idea of using a 10-day moving average on something like this, because then you get out cleaner, and then it'll set up again, and you can get back in.
Fleet, it's doing nothing. It's holding above the 10-day moving average, so there's not really anything happening there. Fleet Core, rather. How does BSX look to you? Let's say I would mortgage my house and sell my kids, my dog, and my car and put all my money into it. How's that? How does it look to me? The question really should be, how does it look to you? If you understand, if we're teaching you anything here, what do you got here? You got to pull back to the 10-week, holding above the 50-day on the daily chart. The stock has been moving higher and pulling back on top of this flag formation. But it's a cheap $12 stock, okay? And they have 6% earnings growth in the most recent quarter. Next quarter, they're expected to post negative 43% earnings growth. So how does it look to me? It looks like something I really wouldn't want to touch. So, I mean, I know it's moving higher, but it doesn't really fit any of the parameters I would be looking at. If you're buying it on the basis of something you know or think you know or whatever, and you're buying it on the basis of the technicals, then the only thing you know for sure is on the weekly chart, you're testing the 10-week line, which it's done several times. And on the daily chart, you're coming right back. Well, you've held the top of this flag last week on the pullback here. and now you're trying to hold above the 10-day moving average. So it's still a very fluid situation here. But technically, so that's the technical outlook. Fundamental outlook is like I don't know why anybody would want to buy this stock. So 6% earnings growth, it's negative 1% sales growth. Maybe they're a buyout candidate. I don't know. But technically, I guess if it busts a 50-day, then you got problems. Otherwise, it's holding above this breakout. So. Gil, do you ever watch index futures such as ES and NQ to gauge your intraday plays? No. Because a lot of times as things start to move one way and then they flip the other way. So I suppose you could. Tenet Healthcare, not really a stock that I would buy here. All I know is you had a pretty ugly base and it must be moving up on some news. So I'm not going to buy it here, bottom line. Facebook's had a nice run. My view, I think this thing's had a great run. If I still owned it, I'd just take some profits here. I don't think this thing's going too much higher. Everybody loves it now. I saw Citigroup came in here, sent the stock over 51, I believe, with a finally going from a hold to a buy. It's like, gee, thanks guys. Nothing like being early, huh? And now so now everybody loves the stock, and you probably got a lot of retail buyers coming in and coming in late. That might even be one of the issues with Tesla. Where's Tesla at right now? Just gonna watch this, and still holding on top. Notice how it's holding on top of this flag. Maybe it does hold there. If you really want to stick your neck out here, the only problem I have here is the market's a little choppy. You could buy it using the low of 168.91 as your quick stop. That's a reasonably quick stop if you're going to try and catch a falling knife, rather. But it's tough. So I'd rather be just watching this right now, which is what I'm doing. Anyways, it's a Yandex breaking out to new highs. Again, notice how it finds support at the 20-day on Monday. You could have bought it right there, and kaboom, there you go. Maybe you trade it. I don't know. But it's at new highs. Looks fine. Sarepta Pharmaceuticals SRPT. So another breakout here. That's basically what you got going on. It's coming out of a long base, but it's breaking out. So I don't know if my tendency, looking at what the market's doing, would just be to take some profits, and maybe you could buy this back if it pulls back under 50 if you wanted to. But my tendency here is just to take some money off the table if I got something that's acting really well like this. So, but if you want to sit with it, go for it. What about NQ, buying around the 20-day? Well, that worked. But today you're reversing, so it's just sitting right at the 20-day. You had a brief rally, so you could have bought it here on Monday, and it turned, and now not very happy today, so it's reversing. But if you guys remember, I think on the chat room, I never really cared much for the stock, and I've talked about it a few times. It's a cheap Chinese stock, and there's some things out there that their days sales outstanding are kind of stretched out, and I guess some of that's due to them billing in India or the Middle East, where people do things differently. Like maybe they don't pay their bills, so maybe that is a bad thing. But at least what they do is they stretch out their payments, and the day sales outstanding that they're not getting paid for will tend to be higher there. And so that's one thing. The other thing is the other day they released a press release about an app that had already been released several months earlier. So, what was that Chinese stock, Dr. K, that blew apart and was getting a lot of hype, and it totally blew apart once people found out that the earnings and everything were all fluffed up?
There were a couple of those, though. That's the problem. I mean, I think that's why there's some distrust with Chinese names, that they can have great-looking earnings and sales, but their stock doesn't go anywhere because of that
right. And then, a lot of people got all excited over this because IBD said this was a high tide flag, and stocks that form high tide flags have 200% price moves, and I say BS myself. You had I don't know how tight this is in my view. I don't think this is as good a pattern as you saw in Yelp in here. To me, that's a high tide flag. It's closing tight. I like to see that better, and a stock at a higher price that's got better institutional sponsorship. So NQ never really thrilled me. I don't know if it's viable here. and you're going to get lucky and it's going to shoot off to the highs, but I don't know. It looks a little, for my money, it looks a little bit shaky, you know. So, and I have to admit, I think I bought a little bit of it in here, and I don't, you know, blew it out real quick, I believe, yesterday. Lock, you know, LifeLock, I'm a customer of LifeLock, and LifeLock's been acting well. I remember watching it down here, and you had a breakout from a little flag, and it's continued going higher. Not really much there in terms of earnings and sales. Earnings growth last quarter was negative 40%. That was the one problem I had with it. But, you know, maybe in this day and age, people worrying more about the security, and that's why it's been stronger. This next quarter, they're expecting 0% earnings growth, which I guess is an improvement from negative 40% earnings growth. But I'm guessing it's also probably a forward-looking story. But, you know, they're expecting, if I look at some of the estimates going forward on this turkey, let me see, take a look here. 2013, they're going to make 35 cents. In 2014, 50. In 2015, 74. So, I don't know. I guess that's decent, but that's 48% growth over the next 2 years, 2014 and 2015. So, you know, it's a forward-looking story, but technically it's been acting great. I think there's probably a conceptual thing going on here. But, you know, if you own it, it seems to hold at least a 20-day moving average pretty well, and so you might, you know, as long as it holds in here and holds, say, 1434, maybe you're okay with it. But again, you know, the market might be an issue here, and this is, and my fear with the market, just going a bit on a tangent here quickly, is that this whole government shutdown, and they're going to say, oh, this is the reason for the sell-off, and what will happen, I think, is if you do have a sell-off, sometimes the news can just be an alibi. And so institutions are selling and unloading stocks, and then what happens is you know you're going to have an inevitable news event that's very likely that there will be a resolution, and the market will jack on that news. And what you have to do is watch and see what the market does once that news comes out, and if it rolls over again, then you might have some big problems. And so I'm not willing to say that we're okay or we're not okay, but it does boil down to just keeping an eye on your stocks. So AFOP is acting more like a flop and not holding the 20-day moving average. You're right on top of this little flag area, so you're at an area where you should be finding some support. But so far you're not, and it's just kind of floundering about. If you look at it on a weekly chart, you know, it could come down into the 10-day moving average if the market gets into more trouble. But I think you have to stick to whatever your stop is on this thing if you're giving up some room. It is a thin micro cap, so my thinking is it should hold, say, somewhere in here on 20. At the very extreme, it goes to the 50-day moving average, but I don't think I would want to sit through that. I think it would be gone if it's unable to hold, say, the lows here today or somewhere along this area, maybe the 20 level, a little bit lower than that. That's probably all I'd give it. INVN, InvenSense, the infamous InvenSense. And here, you know, breaks down, it's coming back up. I'm not a buyer, so. Somebody says, so the idea of selling into strength would be to sell a VRX or SLCA today. You could, you know, or you could wait and see how they act, you know, if they hold up okay. You could sell half, you could sell a third or whatever, or you could sell it all. You know, my inclination would be to sell it all, but I'm willing to come right back in. A lot of people, you know, that sort of thing wigs them out. So it really depends on what you want to do. I'm just saying that's what I would do. And in these two stocks, if I own them, I probably would pare back half and just kind of hang out and see what's going on at least. But I probably, in this environment, what I'm seeing here, I think there's potential danger, so I might just blow the cash. But that's just me. You know, it really depends on your position size and what you're willing to sit through. Somebody says, how would your trading style change if your money was all in retirement funds and therefore had your buy sells limited to free ride sentiment rules? Well, you're going to go, I do trade my IRA, and you're going to trade slower, obviously. And so you have to take a slower approach. You can't trade actively and have all your buying power back right after you sell something like you would in a margin account. So yeah, it's going to change. It completely changes how I operate, and I just operate in a much slower fashion. But of course my IRA accounts will wildly underperform my margin account. Right, Dr. K? Or do you run your accounts the same way? Doesn't matter.
Well, I'm going to be, for me, IRA, generally, I don't want to be distracted so much, so IRA tends to be a little longer term for me.
Yeah. Yeah, so, you might pick more stable names or smaller positions and work them. That's kind of how I do it. So, but I can tell you I don't do it anywhere nearly as well. New Park Resources, cheap $12 stock. It's probably I'm going to guess it's an oil company, right? Yeah, oil and gas field services. 27% earnings growth. Doesn't thrill me, so. But if you like it and it holds this area on this breakout attempt here, then maybe it's okay. Dunkin'. Is Dunkin' Donuts getting dunked today? You try to break out here. It's holding along the 10-day, but I don't know. This stock, it never goes anywhere. So I've never really liked this thing. And so to me, this is a weak sister and not something I would be messing with. It's right at the 10-week line. So what do you think about the new IBD advanced buying strategies? It seems to attempt to employ some of your alternative buy point strategies that are the not so obvious buy points. I think that they respond to us all the time. I think that their recent system they have using the IBD market calls with ETFs is a definite imitation of our market direction model and ETF system. And I think that this advanced buying strategies is directly addressing our pocket pivots and viable gap ups, and even some of the things that I talk about on the chat room, like using the 20-day moving average, using tightness within areas of consolidation when the stock gets real tight and the volume is drying up, the voodoo concept, the volume dry up concept, VDU, voodoo for short, to be clever. Yeah, I think they're definitely responding. But you also have to consider that Dr. K and I were driving forces when we were there. And Dr. K did a lot of research and was involved in a lot of research there, and I was involved in a lot of stuff as well. I mean, don't forget, I'm the only person to have ever co-authored a book with Bill O'Neill, and I did it on short selling. So where does all the work on short selling come from at O'Neill? It comes from me, and the stuff I did that was done as additive work to Bill's original pamphlet that was published back in, I think, '79 or sometime around then. So yeah, if you're asking the question, definitely. I mean, and it's sort of flattering to tell you the honest truth, but it does point out the fact that they pay attention to what we do, and what we do is sound because they're trying to imitate it. Trulia, I already talked about it. It was buyable along the 20-day, nice 2-day move. Maybe you could try and buy it here with the idea that it holds a 10-day, but it's a very volatile stock. Anybody else? Do we pay attention to the dollar regarding all of this stuff? Well, the dollar's making new lows. So that's, pretty grim, I think. And with the dollar making new lows, I'm surprised that gold is not, these are the gold futures, gold is not rocketing. But there's some dynamic going on here, and we'll see something resolve here eventually. But, to me it seems to tell me that either the U.S. is just going to continue to print money, or we're heading to a crisis with the dollar and all of this debt, and it's reaching a head. And this current government shutdown dispute, because Obamacare is really just a big, massive entitlement that's going to cost more money that we're going to have to borrow. Maybe it's a realization by the market of what's going on, but I would be watching for the gold and silver to be confirming. So, of course, there's always a conspiracy theorist who will say that J.P. Morgan or the government, the Fed, are trying to suppress the price of gold, but, who knows? I don't know. I tend to think those guys have enough trouble just dealing with the stuff they already have to deal with, but who knows? CRM, nice viable gap up. This was a viable gap up. Took a little while to get going, but it's hanging up there. If you own it, you notice how it held the 20-day moving average. Maybe you would use that as a stop. But again, I think if I own this thing and it was up in here, I'd just be taking some profits. Would you short LL if it breaks the 50-day? Would I short it if it, well, it already broke the 50-day here, and if I had shorted it there, you would have gotten your head handed to you pretty damn quick. This one needs to set up more. I don't really have any feel for this right now. I know that there are some issues. You know, they got raided by the Department of Fish and Wildlife. They got raided by Department of Immigration, I guess, for allegedly bringing in some illegal wood from Siberia, which is taken from trees that are the food source for a Siberian tiger. But I thought that was, maybe I misread that, because it seemed odd to me that a tiger would eat something off of a tree, unless it was an animal that feeds on the fruit of the trees, and the tiger ate the animal, because I don't know of any vegetarian or vegan tigers, whether in Siberia or anywhere else. But in any case, you know, supposedly this was a danger to the Siberian tiger, which is a endangered species, and so they got raided. And you know, though a lot of people have talked about their products having formaldehyde and stuff like that, their flooring products. So the stock has had a long run. So maybe, you know, maybe this is the end of the line for it. I think if I own the stock and it's not holding, say, this low at least, actually, to tell you the honest truth, if I own the stock, I would just sell it myself, because there's too many questions here and the market's not looking right. So AFOP not able to hold the 20-day EMA. No, it's not. So, you know, if it's not, sell it. FU, Fab Universal. No, that's a great stock. I hope if you bought it on this breakout, maybe that's even a pocket pivot right here, and you sold into what was almost a triple there. So, gee, I think what I would do is I would mortgage my house and sell off all my cars and guitars and everything and put all my money into it right here. Yeah, right. I think this is typical of cheap stocks, penny stocks. Somebody got this thing rolling. I don't know who it was. Maybe some retail brokers out there pitching the stock. You know, penny stock brokerages are notorious for building up inventory of particular penny stocks, and then people get on the phone and get people all excited, and they actually end up running it up, and they're selling it into the move. And so this sort of action looks like that type of thing to me. So. Light in the box. No, that was not the stock. But that is an example of a Chinese stock that got smacked. It was another one. This was a couple, 3 years ago. And I'm trying to remember what it was. If anybody remembers, let us know. Fleetmatics Group as what? It's a short, maybe? I don't know. This looks like a Head and Shoulders and just broke down through the neckline. So, but your 200-day is here. So I don't know if I would be shorting this one down here. So if that's what you're asking, I certainly wouldn't be going long it. SodaStream. It's not. You had a pocket pivot here. It's not holding. So for my money, I wouldn't be holding this stock. Not acting right. AEGR, Agiron. Yeah, you gotta love this one. Straight tries to break out. Breaks down to the, notice, the 65-day exponential moving average, and look at how it holds that thing really tight. So, and notice how it got resistance right here on this rally, right at the 20-day exponential moving average. So these truly are magic moving averages. At least that's the way it's seen lately. But as we know, there's nothing magic in the markets. But kind of interesting how these things, you know, this thing held right along that. Now it's breaking that to new highs. So I don't know if you own it. You've got a 3-day move straight up off the bottom. I don't know if there's news or something here, but you can decide if you want to take some profits if you bought it down along here. Otherwise, if the market gets in trouble, it could come back in, given that it came straight up off the lows. Sino Forest was the Chinese stock you were referring to. No, that wasn't it. It wasn't it. Noodles. I don't like Noodles. I don't like it after it couldn't hold the 50-day moving average. It still can't hold the 50-day moving average. And it's just kind of hanging out, and it needs to do more work at least, so I don't really care for it. Distribution days are starting to add up. MDM getting closer to reversing, Dr. K. Yes or no? Is it within inches or centimeters or, say, millimeters of reversing?
Well, it's really it's possible that it would switch as early as today. But it's also possible it's going to give the market, on the other hand, more room so it doesn't get caught flat-footed on a correction that only goes for a few percent. And right now, you know, the majors are only off about 1% or so. Well, NASDAQ is only off about 1%. S&P is off about 3%. So yeah, it's kind of. I mean, it's the thing is that the leaders are looking okay still. So it's either going to take a very fast let's go to cash or sell signal here and see if the market doesn't recover, or it's going to wait. It's going to wait a bit longer to switch out of this current signal.
Okay. Let's see, Mylan. Mylan had a pocket pivot 3 days ago, and it's holding up still. So it's just holding up. I would think as long as this thing holds the lows. Notice I did find some support at the 20-day exponential, and I guess that would probably be your area of support that you'd be looking for it to hold. Let's see. CSTE. You had a pocket pivot type breakout here, and it's just pulling back to the top of the flag. So there's really nothing. Volume seems to be drying up, so there's nothing there yet. So, stocks, just be apprised that if the market comes down hard, stocks are coming down hard with them, and you just got to decide how you're going to handle maintaining profits or keeping losses to a minimum once these things keep dropping, or as these things keep dropping. So, I can't. I went to cash yesterday. I didn't like really the way the market's been acting, and so my position is completely different. Of course, I was only concentrated in a couple, 3 names. LFT, that doesn't look right. LTF, is there really an LFT, Dr. K?
No,
there is. Long top. No, that wasn't the Chinese stocks. For educational purposes, could you again detail your sell rationale on Tesla yesterday? Well, the first rationale is nice move from the this area coming off the 10 days. So I think that was about 10%, and so that was a decent move, number one. And my feeling was, given the way the stock was acting, it should be pressing to the 200 price level. And so what that means is that if it can't hold, first of all, because it's such a momentum stock, if it can't hold the 10-day, I'm gone. That would be my ultimate sell level, the way I operate. But what I was looking for yesterday is on an intraday basis, the stock started to try and find some, let's see if I can look at this here. But it's not anything I can necessarily educate anybody on. It's just the way I operate on this. Like, there's no textbook available or rules available that made me sell the stock. But if you just go to yesterday, before the opening, let's see, where are we? Yesterday was the second. Yeah, before the opening, they had this thing knocked down. You can see pre-open, 1 o'clock, 2, 3, 4, 5 in the morning. Finally, at 6:30, you open up, and the stock tries to rally back and gets close to unchanged. And my feeling was, if it couldn't hold this rally, and you had a 620 breakdown, which you had right here, I'm just gone, okay? And the way I might handle is, if it turns around, it's a 620 buy signal later on, maybe I'll come after. You had one here, but it wasn't enough to get me interested, given the fact that we were starting to break down pretty hard in the stock. So that was the way I handled it. And for those of you, who've been on the webinars for a while, you know all about this. And that's how I handle it. So it may not be something you want to do, but it's definitely the way I operate, and it's also based on my willingness to move around really fast. So DPZ. Oh, we don't need this. Domino's Pizza. It's holding the 10-day moving average. Looks like you had a pocket pivot in here, and it's just holding it so far. I guess, when the world melts down, pizza will become a valued commodity. Santaris, don't like it. It's not really rounding out. It's still kind of in a downtrend. You'd need to see it do more work and round out more. It's trying to break this downtrend, but I don't really see it as being there just yet. So let's see. Can you walk through how you go 400% on a trade? Does that mean once you are 400? I can't walk anybody through that. I'm not even going to try to, because there's no, again, it's not a walkthrough type of thing. Everybody thinks that trading is all about operating according to some formula or some strict rules, and you're operating, stay between the lines, like you're driving down a highway with lanes and everything, and you're following all the lanes. it just doesn't work that way. If I feel strongly about something, I go in heavy, 100% maybe minimum. And intraday, if I think something has momentum on an intraday basis, and an example might be the other day, Tesla, let's say I went 100% long Tesla here, and I see it gap up the next day, and I double the position, and I'm 200% long here, and it's getting momentum during the day, I might go up to 300-400% intraday to catch a lot of this move, okay? And a lot of that's just judgment. There's no walkthrough. There's no system I can tell you other than using my own judgment and also being ready to run for cover if the thing starts to get into some trouble intraday. But you have to have a fair amount of intestinal fortitude, and you have to be willing to sit through sometimes what some people might consider to be a little pain. I just consider it volatility, and that's basically it. I'm sure you'd love to be able to find some method that allows you to go 400% long anything and make a pile of money every time, but it doesn't work that way. Sorry, Matt. LinkedIn short here off 20-day breakdown. I shorted stock yesterday. I just saw a little V-shaped double top, so I'm actually short LinkedIn right now. Where are we at right now? 244.81. We're down 6.38. I'm skeptical of something here, and a few things bother me. I think there's like 960 something funds own the stock now, and that's a huge number of funds. You got to remember, 2 years ago, 220 funds owned the stock. They had about 7 million shares. I think now they have, let me see here. $51 million. So there's a lot of funds owning the stock now. So everybody loves it. And the one thing that bothers me, and I've been thinking about this, you have this pocket pivot after they priced the secondary at 222. Huge amount of volume. That was probably, okay, they added the volume from the 5.38 on that, right? Is that right?
Yeah, that's right.
So the volume, to me it looked a little, that might have been manufactured. The fact that you didn't get any thrust after that, it went up a little bit more on lighter volume. Here, you can see that. You're making new highs here on below average volume. To me, that's suspicious. And so then you break down, you've gotten hit with some volume lately, and I'm asking myself, why did they price this thing at 222? Were they really desperate to get the thing out the door? Do they know something in terms of earnings coming up, which I think are, the beginning of November? I'm looking at one source says November 1st. Some of you can check briefing.com to see exactly when earnings come out. But, the earnings come out within the next month. And they did this about a month ago. Why not, if you think your earnings are going to be good and you might get further upside, and you're talking up your business and all, why not wait until then to do this? Or why not do half and then see if you can do another half later? Why do you have to get it all out the door and price it at 222 at a pretty big discount to what it was trading at, which I think was about a 10% discount at the time? So to me, that's suspicious, and I'm wondering whether this thing is maybe going to have some problems. For now, it's holding the 10-week moving average. It's stalling a little bit up here. So, I shorted yesterday, so I guess if you wanted to short it here, you could, but that's a different story altogether. Please consider a short selling technique webinar in the future to help us get ready for the eventual market sell-off. Yeah, I guess we can do that. Maybe we'll do that in the next couple of weeks as I get inspired here on the short side if the market starts to break down. But basically what you would be looking for is a breakdown off the peak. So, a sharp breakdown, and then a weak rally that starts to fail, and that's really where you come in after the market on the short side. Although I do try and pick some things off the peaks. Maybe, I shorted Pandora this morning. It looks like a double top, and I've been studying double top formations in certain stocks within the context of market action, general market action. So if you get a market starting to roll over, you got a stock at a double top like that, and it has a high PE or no earnings, basically, like Pandora does. Another one that's like this, Yelp, is a little bit like this. I mean, Yelp came in with a whopping 4 cents, or no, not Yelp, Pandora came in with a whopping 4 cents last quarter, but it's trading at 896 times estimate. So what happens, these stocks will correct harder off a peak, and so I'll look at double tops, but I'm still doing more work on these and trying to study more of them. But you can see that, you know, this was like a double top, but the market, I don't think the market was in bad shape here trying to rally. You notice here a little double top and it pulls back. This one wouldn't have really worked, but I think it's within the market context. It's sort of narrow formation, and I'm wondering if it's within a certain number of days. That's things I'm studying on this right now, but it's sort of experimental. But so far, I hit this one up around 27.30, 27.40, and we're up a little bit less than $1 right now on the position. So it's kind of working, and it could retest, you know, from here. I still don't really understand what's so hot about this one, but you know, it's been going higher. So. But that's one of the methods I'm testing out right now to short into a potential market top, even if it's only short term, because I'll short on a tactical basis very quickly for 1 or 2 or 3 days and try to just pick something off. Cree, well, if you were in the chat room, I was talking about Cree in here, that you might see it turn, and it looks like a classic short setup, you know, left shoulder ahead. But in this market, we've seen these so-called classic short setups, like ARM holdings, you know, classic short-term setups turn around and go higher. So my theory was that maybe it would do something like ARM-H. I think they're both semiconductors, although Cree makes LED lighting stuff. But you're not going to buy this thing now, that's for sure. But if you had bought it in here, or I was even talking about it down here in the chat room, and you own a little bit of it, you got to play this move. But you could even bought this move above the 50-day on Tuesday rather. So market's getting hit some more. This is starting to get real fun. Let's see here. Is EVR a sell? Dr. K, is EVR a sell?
Let me take a look.
I would sell it myself. It's just not holding that breakout.
Yeah, the market's kind of tenuous here. It's back into its base, so yeah, I'd be out of it.
Okay, there's your answer. All you high-frequency funds out there, you can short the stock to get ahead of this guy's order. He's going to sell it now, I guess. Angie's list. Angie was good for a short, too. Yeah, I noticed in the chat room someone was getting all excited about Angie and talking about it as being in a big cup with handle, but maybe no. I'm sorry. I'm mixed up. Away was the one they were talking about. What's Away doing? I think Away's a big pooper too. But oh, look at this today. Must be some news. Maybe it's a short. I'll have to look at this one. But average volume, well, 1,000,001, barely clears the average. But let's go to Angie. Yelp is a winner here. Angie, actually, if you look at it on a weekly chart, let's take a look here. Sort of a head and shoulders, and now you're breaking down through the neckline. That's pretty ugly. So that would have been a good short. Kind of a thinner stock though, 1,000,005. You know, sort of like well, close to 30-something million in daily dollar volume. So CLDX. This is a nice move, I think. And you got, you know, if you bought it in here, which you would have had to bought it. I think you can sell into this and take a nice profit. So, I'm looking at some of the names that are up. Silica's been acting well, kind of coming in. It's below where it gapped up to. Is a viable gap up, I guess, this morning, but it doesn't seem to be. It's filled that gap now, so it's up there. It can pull back. I like this name still. Let's see. NPSP has been hanging there. Forget it. Notice these solars have been strong. Skewer has been strong. These probably are all going to reverse from here, though. CSIQ, Canadian Solar, gapping up today. The only doggy one has been Solar City, which is hanging back, but it probably looks pretty bad. First Solar had a pocket pivot up to the 50-day moving average on Tuesday, and kind of backing down today. I think these are basically a market question for the most part. But solars have had this little bump over the last couple of weeks. But is everybody going out and shorting Pandora now? Oh, brother. I'm going to cover it now. It's down to 26.21. you know what they say: bulls make money, bears make money, pigs get slaughtered. So don't want to become too much of a pig on the short side. But things seem to be working right now, at least on a tactical basis, from what I see. Nike. Someone's asking about a gap up, didn't hold it at all. I probably, if I owned this stock and I had bought this gap, I probably just would have lost it there. Nike is a big cap stock. It should be more stable than that. And now you come down to the 10-day. I don't know if you bounce off of there or not. Autodesk. I'm noticing LinkedIn is coming in now too. A little more, 244.14. I think that's the low for the day. Is that right on LinkedIn?
Yeah.
244.
244.
So we're yeah, so it's getting bopped. Let's go to Autodesk. Autodesk is this stock negative 6% earnings, very erratic. So it's not something I'm going to buy. I wouldn't. Probably if I owned it, I wouldn't even want to. I'd probably sell it myself. But I don't know if you know something here. But negative 6% earnings growth, negative 1% sales growth. Next quarter, they're looking for negative 16% earnings growth. Not sure why anybody would look at this stock. It's ugly, ugly. Let's see. Any more questions here on stocks? Did I want to talk about anything else here? Not too much acting very well. You know, I'm looking at Coors is reversed here on an outside reversal day. That was a stock that had been acting well. Is there anything you're looking at, Dr. K, that might be viable?
No,
Or,
not right now. No.
So you want to see everything kind of settle in?
I'm playing defensively here. It's just also this the debt issue could cause some turbulence in the market, and there's nothing to me that looks all that good. I mean, Tesla was it prior to 2 days ago, but right now I think people should take a defensive posture with that stock.
Yeah, and there were some great trades in some stocks. I mean, I'm even looking at Trulia, really getting hammered now, breaking down through yesterday's low. And again, these are volatile stocks. My view is these are trades, and in this environment, look at Netflix down, reversing yesterday's move and coming in. So they're hitting everything now, and you have to. I think you have to be defensive, and I think that also means take some profits. Take half, take the whole thing, and figure out where and under what conditions you would buy the stock back. And that's basically how I operate. I don't sit around. I don't like sit through this kind of garbage. So I don't know if anybody out there does, but I don't. Chipotle's had a nice move. No real pocket pivots here. You did get some volume selling here, so it probably would have to hold up here. Stock's been acting okay, but it's had a nice move off the ultimate lows from October of last year. But it's holding up for now, so you have to decide what you want to do here. Lululemon, I'm wondering, this could become a short again. Here's again the classic head and shoulders. It starts to break, but it doesn't work out. And maybe now it starts to work, and you want to try go short this thing here with the idea that it's going to break down. Notice how this week it has held the 10-week line and the 50-day moving average. I guess that would be considered the line of demarcation. So it looks like LinkedIn going lower, 242.82 printing now. Let's see, anything else? So that's basically what I'm looking at here. Even on the short side, looking at some double tops. Yelp, I was wondering, maybe that's a little top here on the stock. This thing's crazy. Ran up. I thought it was shortable this morning around 72, and that was near the high. And now you're starting to break down. But everything's coming off. The market is getting hammered, so they're going to take everything down. And you can see everything coming in. So it's really a matter of deciding what sort of defensive maneuvers you're going to take. And I've talked about some stocks that I think maybe it's time to take some profits. And again, if you have 20% moves or better in position, I think it is prudent to take some profits. Anyways, we've been on for more than an hour now. That's all I have. Dr. K, anything to add?
I think we're good.
So be cautious here. We're not really willing to step in here and buy stuff. For real-time commentary or my thoughts in real time, you drop into the chat room. I may stop in there later. I haven't been there today yet, but I'm usually there between 8 and 8:30 a.m. Pacific time for a little while if you have any questions. So anyways, on that note, you guys. Oh, wait, one more question coming through. global payments. Bible gap up here, so I guess use the low of today, or yesterday rather, as your stop. That's 54. Or you could just bag it and see where it goes. Here, my guess is if the market stays weak, you'll retest this low. So, anyways, that's all we got, you guys. Thanks for showing up as always, and we'll catch you next week. Or if I decide to do a short selling webinar, I think that's a good idea. So I'm going to try and work on that and do that. So we'll let you know when we schedule that. Anyways, catch you next time, you guys. Take care.
So long, everyone.